Hi, this is Jack from Alpha Charts with a state of the market video. Today is April 2nd, 2022. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security. Now, I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, again, if you like these videos, go ahead and please subscribe down below. It really helps me out, and I do appreciate it. Also, you can find me on Twitter at AlphaCharts365. All right, so let's look at these charts. Starting with the SPX, and so you have this big potential topping pattern. Now, on this right side over here, first off, a few things I do like. We made a higher high like that. So that's very constructive. We held at the right area. You see buyers stepped in right here. That was very constructive. We still have a rising 200-day with price above it. That's constructive. We have a flat 50-day looking like it may want to turn up, right? And we have the 23-day that's crossed above it. Again, moving averages are starting to turn and align bullishly again. That's constructive. So a lot of nice things are happening on this chart that are looking constructive. Also, hey, this run was very constructive, right? Huge run. So the pullback is normal at this point. As long as price can stay in this general range and make a higher low, that's absolutely fine. And I think this pattern, obviously, once we get above 4,700-ish, is completely negated. But right now, it's working on negating this particular topping pattern, and then it looks more like a sideways chop fest more than a topping pattern. We'll see what happens, right? Again, I really like the way this candle right here, this last candle, had buyers show up and defend this general area. Again, above the 200-day, still rising. Longer term trend is higher, that means, right? All right, so SPX constructive, even the pullback. Next week, though, again, this 44.85 level, that's going to be key because you're going to have this moving average in that general area too. Again, you're having that slight curve up on the 50-day, and that's, again, I think really important to get this power trend back intact. Really nice looking there. Looking at the RSP, the equal weight. So equal weight came back to this general area and got rejected. No big deal. That's kind of what it's supposed to do, right? Now the pullback, and we'll see what happens, right? Very similar in a lot of ways. You have this flat just starting to curl up, 50-day, price above the 200-day, still rising. Actually, the equal weight is more constructive looking than the cap weighted, just by looking at moving averages. They're closer, more aligned. They're going to get into a power trend even faster. And I think that tells you how that this is the breadth is in this market is pretty good. And we'll look at breadth studies later, but RSP equal weight is a decent breadth study. And to me, this says that breadth is recovered nicely as well. All right. Qs. Now, going back to the SPX, just one more final thought on there. SPX is a mix of a lot of a fairly broad swath of the stocks, large cap 500. So, you're going to get oil and gas names in there. You're going to get, all kinds of stuff in there. The Qs are more technology based. And so you'd expect these to potentially be worse looking, and they are worse looking, right? So there you have price underneath the 200-day moving average. You have the 50-day just starting to flatten out. So you have a few things that look a little bit different. Now, this was an area that we identified right here. This was important, right? So price got above it. It didn't make a higher high, and then it quickly, fell apart. That's where the 200-day is too. Try to poke its head above the 200-day and quickly fell apart. So that being said, also, if you notice, Friday was red and not green on the weighted Qs. We'll look at the equal weighted in a second. All right. So again, it's giving you a lot of mixed signals here. Maybe this is some type of bottoming pattern that it's carving out, but definitely not nearly as constructive looking as the S&Ps, which just shows you that technology may be still out of favor, because that's what Qs are basically measuring. Looking at the equal weight Qs, and it was green, right? So the weighted Qs, red, equal weight green. So at least you're seeing a little bit of breadth expansion, even in the Qs. Again, well below the 200-day, but starting to see a little constructive on the short to medium term moving averages. On the equal weight, we did, so this head and shoulders pattern did confirm. This larger topping pattern right now is, we'll call it in progress, but we won't know until either can make it, get above this area and negate it, or if it breaks down from here. But again, this move, maybe it's a bear market rally, or maybe it was just a very constructive move. Again, we don't quite know yet, but we do know that the Qs and the equal weight Qs definitely not as good looking as the S&P 500. I think that's information, right? Because it helps us decide where we want to allocate money. IWM, the Russell, again, long, gigantic range for basically a year, broke down, came back up, retested from the underside, and so far got rejected. Now, we're starting to see the curl on the 50-day. And so we have this short to medium turn starting to look constructive, but the 200-day is still declining. That's a problem. So if IWM continues lower from here, that's going to be an issue. I might do a VWAP from, what day was this? Here. Yeah, from this day right here. That's this purple line. So right now, people that bought the bottom here, with the potential bottom right here, right now they're doing fine, right? They're in the money. So I'd watch IWM. I think it's going to give you a lot of clues if this area breaks, or if we come back above. Again, declining 200-day, it makes it a little bit more iffy. And looking at the IWO, prices well below that 200-day moving average and below the VWAP is from the COVID lows. So you're having price below the COVID lows, and it's acting as resistance right here. I do like that this downtrend line is broken. I'm going to take that out. But it's having issues, declining 200-day, the flat 50, it's nice, right? But it's got to get above the 200-day for it to be like, healing. And it's going to do it one of two ways. It's either going to chop around here for a while and let the 200-day catch up, or it's going to zoom higher. Again, it just shows that growth, especially small cap growth, is still out of favor. Again, maybe it's going to start coming back, but as of right now, doesn't show that way. And let's look at mid caps. Mid caps look way better than the Qs or the small caps, but not quite as good as S&P, because it's right at the 200-day moving average. Again, you're getting the curl up on the 50-day. That's really nice to see. And again, price coming up higher and above, even above 500, right? And holding above 500-ish. That's a psychological barrier. That would be fine. So mid caps look pretty good. So you're getting a lot of mixed signals on the indexes. And I think that plays into what the market's actually doing, which is it's basically telling you that certain sectors are performing really well, holding up the indexes, and certain sectors aren't doing well, dragging down the indexes. So we'll see how that plays out. I think next week's going to be a pivotal week, because every week's a pivotal week, right? Let's move on to some sectors. XLF. So we want to see XLF at least participating, and we can call this a sideways chop, but I'm seeing lower high, lower high, lower high. So, and now we're back below the 200-day, and the 50 days, again, surprisingly still above the 200-day, where a lot of other places it's crossed a long time ago. So again, maybe it's chopping in a range and it's going to turn back up here, but it's got to make a higher high, and it's not doing that yet. definitely something to be aware of. Financials breaking down, not good. So that's definitely one in the more bearish scenario. And my most important one is SMH, right? Subsector. There's your 200-day at 274.50, right in this area. Price got extended, got above it, and then just quickly broke back down, like with a vengeance. So with that being said, it's again, you got lower highs, lower high, lower high, right? So below the 200-day moving average, it's hard to be bullish. And I really do think that that technology still has a ton of work to do. This is just a really bad look right here, how it could not hold above it, and the sellers literally came in distribution. We'll be watching this 255, 253-ish area. If that holds, great. Maybe it's trying to just carve out a bottom, right? Inverse head and shoulders or something like that. But right now, as an indicator, SMH definitely flashing a warning sign. Again, it got extended, I get it, but pretty hard sell off into it, right? We would have seen tight action or a very slow leak down into maybe the 200-day and then a bounce potentially. But you didn't see that. You saw it rip through the 200-day. Not good. Lumber, sideways chop. We're just going to go right past that. VIX. Let's go ahead and take off some of these moving averages because I don't like them on here, or the volume, and clean this chart up a little bit. VIX is low. So that's nice to see. So again, I think it goes into the idea of play in the sectors that are moving for you, because the volatility is decreasing, but it's decreasing. Let's look at the VIXN. Even the VIXN's decreasing. It's decreasing, but it's mostly because some sectors are working and some aren't. And so I think you got to be aware of that. Put call ratio, equity only, still in this choppy middle of the range. No signal in this range at all. So we'll just keep moving on, because breadth is where it's at. I think you saw this nice big recovery of breadth, and it's holding above this area. So very constructive there, and very constructive there. And so we like that. On the value line geometric index, looking at percent of stocks above the 50-day, we're running at 58%. Again, very constructive. You're seeing an increase in breadth, which is really nice to see. This nice little breadth thrust, we'll call it, right over here, last few, mid-March. And now it's kind of holding up there. So that's great to see. Gold came back in, decline. Again, looks like it wants to break down from here. Again, as a risk on, risk off scenario. Again, just that trend lines from the weekly. As a risk on, risk off scenario, you saw the lower high. And again, a declining gold is probably more of a risk on scenario. And then let's look at Bitcoin. And then Bitcoin, just go to daily. Love that it's back above the VWAP from the highs. That means people are making money again, kind of flagging out here. Bitcoin being the riskiest of the risk assets out there. Very constructive. And if you see, this is what I was talking about with like the banks, or what I think it was the banks, or SMH. It ran hard, came back, found support not too far below, and now it's moving higher again, kind of flagging. That's what I would want to see. Not that let's see what the 200-day is on Bitcoin anyway. All right, so and it did get rejected at the 200-day, which is kind of interesting. But again, this is a flaggy nature that I think is going to be important, and we'll see if buyers show up, right? I mean, so far they have. They defended this area, they defended the VWAP, and now we're starting to see maybe the turn. We'll love to see it above the 200-day, because that's right now flat. Above the 200-day, and that would be very, very constructive for Bitcoin. Again, risk of the riskiest assets. So people are putting money at risk. That's what I like to see. And some people are asking about Ethereum. Very similar look to it, but this one is above the 200-day moving average. And I think that is huge, actually. And Ethereum, I think, is going to start to outperform Bitcoin. It's my idea. If you see, it already is. And so if you look at, I've been showing this chart a little bit. BTC, yeah. So this is, let's go to the weekly chart. Here is Bitcoin, I'm sorry, Ethereum versus Bitcoin. Again, this is just an interesting chart for me. It's creating basically a cup and handle, break out above this area. And I think Ethereum really starts to rip to the upside. Again, this could be, it's been in this handle since May of 21. So it's been a year making this handle. So just so you know how long it's been. But this is really, I think, the chart to be watching for these assets for cryptocurrency. Watch Ethereum. Good chance it's going to outperform Bitcoin. And so that's what we got for you today. So basically, know what you're buying. I think that's the theme here. I don't think the market's. Oh, I didn't do the bond deals. HYG. Let's look bonds real fast. I'm sorry. Before we do this, bond yields. This was concerning, right? Then this was not concerning, right? This was saying everything's okay in the bond world right now, at least, right? It actually made a lower low. That all looks good. People were talking about the 10-year, 2.36. Again, I think this 2.75, 2.8, area, maybe 2.85. I think that's the part to really be worried about. If this trend line downtrend holds. Again, going back to, let's do a monthly chart. This is it. This is the downtrend from 1981, right? So it's a big deal. On the weekly chart, all these spots are hit. I was lazy right there, right? That's why this downtrend is such a big deal. It's held for 40 years now, 40-year downtrend. So 10-year, everything's okay as long as it doesn't get above 2.8, 2.85. And if it does, we better come back in real quick. If not, these can get crazy to the upside. I don't think it's going to, but who knows, right? We'll see. But that's TNX. I know the yield curve inverted, and if I remember it, let's just look at that. Let's see. I don't remember the yield curve in TradingView right now. Anyway, point being is that even if there is a recession on the horizon, and I don't know if there is, the tends to, let me see if I remember it, 10 USD. Yes. 10-year minus US 2-year. Oh, it's 0-2-year. That's what it is. There we go. That's what I'm looking for. There you go. Here's the yield curve. Actually, this chart, I went ahead and, from inversion to when the recession started, this is a chart I made the other day. Basically, it can last, 9 months, 6 months, sometimes longer until a recession happens. And a lot of times the market's really good leading up to it, right? Is a last thrust higher. So just because we had inversion, and right now it's inverted, doesn't mean that from first inversion to when the recession actually officially starts, again, the S&P could be really, really good. And TradingView used to let me compare it. And again, I don't know. They took that button away that was compare up here. So I'm not sure exactly how to get there. But you'll see if you look at the dates, the S&P is actually does really well. Again, you got to know what you're buying and so on and so forth. So just because inversion, don't get all crazy. Think the recession is going to happen next week. Chances are it's going to happen 6 to 9 months, maybe a year later if it does happen. It's happened every time since it has inverted. So good chance it could be mild. Who knows what? Who cares? You know, at this point, who cares, right? Just don't get all bearish, because chances are there's going to be money to be made leading up to it if it does. But yes, it did invert. Yes, I'm not too worried about it right now, because I don't think it's an actionable signal. All right, so there you go. That was the yield conversion. We talked about bonds. We talked about everything else. So I think definitely things are looking bullish again, but only in certain sectors. So know what you're buying. That's the theme this week, right? Also, I do a pretty good relative strength, if I do say so myself, study called the long view, right? And so the long view is a video I make that is ETFs, weekly charts, looking at relative strength, and it's really made for the if people want to trade off of it, you know, people that go to work and full time and can spend time watching the markets and so on and so forth. But the beauty of the long view is it starts the process of drilling down is what sectors are leading, who's outperforming. And so even if you are a trader, you're a day trader or swing trader, it's a great video to watch because you know what sectors are actually causing this rip to higher, because not everyone's participating. And once we identify those, then I do my stocks to watch video, which drills it down to specific stocks are also outperforming. So, you know, it's part of my process, and I share it freely on YouTube. But the long view, if you haven't checked it out yet, check it out, because you're going to see, you know, if you want to start trading ETFs, or if you work full time and this market's chopping you up, it may be something you want to consider. Again, you got to have a longer term mindset and time frame, or else you could use it for its relative strength study and be in the right sectors. Because right now, if you're in the wrong sectors, you know, you're not looking so hot. If you're in the right sectors, things are okay. All right. Again, like and subscribe. If find me on Twitter at AlphaCharts365. Y'all have a great week.